Morning everyone, this is Rajendran here joining from Bangalore. So prior to getting into the session, I just want to have an sound check. So is the audio and video quality is fine? If yes, just raise your hand so that, okay. Thanks Amir, Anish and Prashad. So let's get into the session. I'm not going to look much into the global market sentiment. I guess everyone would have gone through that. Right? If you understand, today's the global market sentiment is weak. Yesterday it was closed negative, more than half a percentage, and currently the Asian pack is completely trading negative, especially China. I guess it's down more than 2% now, right? So let's get more into the open interest picture. We'll try to understand what is happening in the open interest picture front, right? So when it comes to the Indian market, I'll go to the open interest picture. So we can see that the open interest is highest at 7,000, followed by 7,000 PE, and also at 7,200 strike price, right? So and on the call side, you can see that 7,500 calls has the highest open interest at this point of time. But relatively 7,000 puts and 7,200 puts are having the highest open interest. And right from the beginning, we've seen that this 7,000 put open interest is more likely written by the retail traders. And the retail traders are the one who are writing both the calls and puts. FIs are currently not participating in writing options. The majority is from the retail funds, right? So let me also go through the participant wise open interest as well. So interesting picture over there. So interesting picture over there. So what's happening over there? The retail traders are getting into shorts. So the complete rally right from the bottom, right from the start of the series, the retail traders are somehow want to short this market, right? So they are keep on adding the shorts every 100 points or 200 points order, right? And marketers keep on doing an one side of action, and the retail traders are completely trading against the trend. So far there is no loss booking coming from the retail traders front. And if I go through the futures index, FIs futures index sentiment, the FIs are still are adding the longs, right? So they turn to net buyers in index futures, right? So and yesterday marginally the short addition was visible over there, but still they are highly bullish on index futures somehow. And when I look at the option front, this is the client, retail clients open interest position for the index options. If you see, there are two things are happening there. The purple line, which is nothing but the index put short, and the red line, which is nothing but the call short. So you can see that right from the beginning of the series, the retail traders are doing only two things here. They are writing both calls as well as puts. Right, so they are the one who is writing the 7,000 put options, as well as they are the one who is writing the 7,500 call option. And let me also go through the FI index options. So the FIs are doing a completely reverse of what the retail clients are trying to do, right? So they're not writing calls or puts, but instead their aggregate net position is something like they are relatively adding in naked calls and naked puts, right? So that is what the green line shows. It is the retail client, the FIs are still adding put longs, and the orange line is nothing but the call longs, right? They are also writing, but the confidence is there in writing going naked longs in both calls and puts. And somehow FIs are showing a contradictory position. In the futures, they are showing a bullish position, and the option front, somehow they are showing a bearish position, right? So there is no clear trend visible from the FI side, and the retail clients think the market is somehow range bound. That's what they are trying to write calls and puts. They're writing both calls and puts. But on the future side, what they're doing, they're completely going mad on shorting the futures. If you understand the behavior of retail traders, the retail traders are quite dumb in Nifty futures. The intelligent sign is hardly visible in Nifty futures. Sometimes when the volatility was there, they get confused. They go long, then they go short, right? So they have an mixed stuff over there when the market is showing high volatility. But when the volatilities keep on going down, they completely somehow they try to trade against a trend every time, right? So from the client index future side, the intelligence is hardly visible, and FIs are quite intelligent from the index future side. Yes, they do both have an mixed stuff. Sometimes they win, sometimes they lose. But whenever they are winning, they make sure that they are taking the bigger chunk, right? So, and whenever they are losing, they ensure that they are losing a little in the counter. Especially this happens in the counter rally trend. So what happens after the budget? After the budget, they started covering their open interest. You can see that the green line is keep on coming down. That is nothing but the index future short. They're closing their shorts, and this triggered a short covering rally in the market, right? So after the budget, it's mostly a short covering rally. It is not a fresh push. No one is adding a position. The retail traders are going short, and FIs are covering short. Right? This is what happened after the budget. And when Nifty was above 7360, right, and then Nifty opened with an above 7360, it started trading in. Then the FI started increasing their net longs. Right, they are right from the beginning. They are adding the net longs, but after covering their shorts, they entered into an long. Their net aggregation was net longs over there. Right. So far, the FIs haven't made any great money by adding into the futures, and the retail clients also haven't made any money by shorting the market so far. Who is really making money, if you ask me? The retail clients, the one who is shorting the calls and puts, are making the real money here. That's what I'm saying. The retailers are showing in some sort of intelligence from the option front, and the FIs, again, they haven't made any money here. So the current counter rally is completely taken by the retailers so far, right? So far, the retail option crowd had minted the money. Now let's get into the market profile charts, right? So before to get into that, I just want to tell you, and let me open my charts. So let's get into the price chart of Nifty and Bank Nifty, and let's try to analyze what has happened right from the beginning. Let me try to put some price charts. So we generally start with a monthly, weekly, and daily approach. I think we had already seen enough in the last 3 weeks, right? So there was to narrate the thing. We are one-time framing in Nifty futures for almost 5 months. One-time framing is nothing but the market is keep on making an lower low. So far, Nifty had made an 5 months of complete lower low and lower high formation, right? So none of the month the previous high was breached. So this is very rare phenomena, especially in a downfalling market. Even such phenomena is not observed in the downtrending market during 2008, right? So prior to that, this happened during 1995 or 1996 even. There was 6 months continuously one time frame, and finally the one time frame came to an end by making an higher high. So again this month we are having an expectation, like there is a possibility that we could make an higher high. So Nifty spot, for Nifty spot, let me go to the charts. We go to the EOD chart, so that you can understand what I am trying to say. Right. So close this, and then let me open the monthly charts. Okay. In the meantime, let me go through the daily charts as well. So daily chart of Nifty futures. So this is a daily chart of Nifty futures, right? So you can see that you can see the one-time framing happening on the daily scale. So this is the first candle on the budget day, followed by a higher high and a higher low. Second day followed by a gap. Third day. This is the third day followed by a gap. Fourth day again a higher high followed by a higher low. And fifth day again a higher high followed by an higher low, and again on sixth day. So far we are one time framing for the 6 continuous days, right? So what does this mean? The market is doing only one thing here. The people are keep on buying, and nothing is happening apart from that. So who is buying? So far these 2 rallies are followed by an short covering rallies, followed by an buying from the FIIs, and the retailers are again going short, right? So anyways, the one time framing at some point of time has to come to the end. In the sense, say today, if you want to end this one time framing, it has to make a lower low. Yesterday's low was around 7414. So if today Nifty is making a lower low below 7414, we'll say like the one time framing comes to an end. But only one thing is there, it cannot keep on doing an it cannot keep on making an higher high forever, right? So we haven't seen any such such. I can also spot you out some of the one-time framings here. So here you can notice there was a one-time framing occurrence in this zone. So Nifty was making a higher high for 4 continuous times, right? In a sideways, when the market was in sideways action, and then the one-time framing happening over there, followed by a reversal. This you can notice this particular bar had done an mean reversion here, right? So it made a lower low, and again you can see that the market started one time framing again. One time frame, so 1, 2, 3, and 4. So again we see an negative one time framing. So this is an one time framing down. So I can tell you like this is an one time framing. Let me give a different color. Okay. Some light color. Okay. So this is a one time framing up, followed by an one time framing down, right? Again followed by a reversal. So this reversal is again an sort of an one time framing. This one time framing is a little powerful. It is extending more than 4 consecutive higher highs. Almost we had done so far an 6 continuous higher highs, right? So at some point of time, market has to come. This one time framing has to stop, right? So when it is stopping, either it does a mean reversion, or it does some sort of sideways action followed by an again it does what it wants to do, right? So one scenario what I am thinking from my mind is one is a complete sideways action, right? So that this will kill the retail traders' patience, followed by some sort of downside action, and then an market should pull back. So this sort of action what I am expecting in the market are see eventually the downside will get filled. Let me have some, yeah, this downside option will get filled. This downside will be get filled, followed by when the market is trying to fill this gap, more and more more and more shorts will get created, and followed by an quick pullback, right? So if market is going to fall, the retail traders are so far betting on the shorts, and they may eventually try to end up more shorts, right? So if market is going to fall, it could be an in that way the one-time framing comes to an end, followed by an quick pullback, because if the market is going to fall, the retail traders are ready to add more short. That is what so far we are seeing. They are very mad on adding shorts, right? So any sudden spiky downside movement will be followed by an spiky upside movement. This is one scenario what is coming to my mind. The other thing is, like, it could be a range bound, and then it will frustrate the one who is in shorts so far, and then so that they will be ready to take an a range bound followed by a downside movement. They'll be ready to take and cut off their shorts, right? So after a frustration, for say like some 3 to 4 days of sideways action, and nothing is happening on the downside, so the followed by a downside auction where the retail traders will get frustrated, and they will try to cover off their position halfway, right? So that could be another possibility I'm seeing. An immediate downside followed by an upside movement, or an range bound followed by an downside movement followed by an immediate pullback, right? So one thing is there. I mean, the downside movement, playing the downside movement is not going to be an easier game. If it is going to be an easier game, it is going to invite more shorts again followed by a pullback, right? Ultimately, what I'm seeing so far is this scenario is whatever be the scenario, it is going to favor the longs. So ideally, it is not going to favor the shorts. The shorts are not going to get easy for the traders. And yes, we have a gap over here. It has to be eventually get filled off, right? And let me go to the monthly time frame as well. So charts are still loading. Okay. So if you notice spot charts, I can tell you clearly one thing. This gap, the current gap here, right? So this gap has been, let me mark this gap. So this gap is nothing but an closing of gap. Okay, leave it. It's not happening. Yeah. Okay. So if you notice this particular gap, the gap after 2 days of budget event, right? So this gap created, and then it closed the previous gap. The previous gap was on 10th of February, a small 1 or 2 points of gap. Right? This gap has been closed by another gap. So whenever a gap has been closed by another gap, the higher odds that it will come and fill. The only thing is we don't know when it will come and fill, but it eventually it has a higher tendency to fill it faster, right? So it will try to fill it faster. But as I spoken, there are two scenarios is coming to my mind. One is an sideways action followed by an dip and then an immediate pullback, right? This is one scenario. or an pullback downside followed by an immediate reversal towards the upside, right? So this is what is coming to the mind. And so anyways, in that way, the one time framing also comes to the end. And on the monthly chart, if you understand, the previous month high was around, this is the previous month high, right? So previous month high is around, what is the high? This particular date. The high is at 7,600 on the spot charts. I'm sorry. Yeah, this is February, right? So on the spot chart, 7,600 is the high. So the high has to be breached out. So this expiry somehow, the market should confuse the short sellers, and finally it has to try to test 7,600 once, so that the monthly one time framing also comes to the end. The one time framing down has to end by making an higher highs. Right. So let's get into the profile. Let me get into the profile chart so that we'll try to identify some of the high probable zones. So this is a Nifty profile picture here, right? So let me split yesterday's profile and tell you what happened. I'm splitting the profile. Right, what you can see here is this is an TPO1 chart, which means each and every letter is an 1 point thing, and the letter A is nothing but how the price got distributed for the first 30 minutes, and the letter B represents the next 30 minutes, and the letter C represents the next 30 minutes price movements. Right, so it looks like a candlestick. If I try to combine if I try to combine towards the left, you can see a distribution. This distribution, by reading this distribution, we can come to know that who is doing what, who is in control, whether the buyers are in control or the sellers are in control, right? And it's nothing but a market generated information. By understanding this market generated information, we'll try to understand who is in control in the market, and what are the high probable zones the market are more likely to get visited, and when it could visit. This is what we have to do. What we have to do by taking advantage of this information, right? So let me split this profile again so that you can understand. At the G period, if you notice, the market started one time framing. So G, H, I, J, K, the market started one time framing, right? So it started one time framing and followed by the one time framing finally came to an end with an L period. The L period made an higher high, and finally it once again back into the value. So the one who are shorting below the I, the one who are shorting below the value area, the value area represents the 70% of the profile, where the 70% of the price got traded, right? So we see the red bracket is nothing but the value area, where the 70% of the TPOs are nothing but the blocks. 70% of the blocks got traded, and anything below the value area, we call it as an unfair low or an unfair high, right? So in this case, the traders are trying to sell below the value area, right? And whenever people are trying to sell below value area, they are more likely to get short. What I'm trying to say is the probability of getting an edge below the value area is very, very low, right? So most of the times the traders who are selling below value area are nothing but the emotional traders, right, who doesn't want to miss this trend, right? So what happens again, the intraday short sellers are more likely to get trapped. The one who are selling here are selling below the value area is nothing but an shorter term sellers are most likely to be an daytime frame traders, right? So and finally they'll get into a short in the hole. Nothing but the shorts are getting trapped. The shorts are getting trapped, and eventually we left in the market with a weak high. The weak high, if you notice the LM, which represents the matching highs, right? So I'll mark it as an interesting reference here. This is again on the upper side is an on the upper side. This is an interesting reference point to me, right? So let me apply this. So it's an interesting reference point for me, 7460. We have a matching week high, and so finally the players somehow got caught in the shot in the hole, this zone, right? And if you notice, yesterday we formed an poor low at 7413, and there is one more poor low at 7405. So these are the zones market are more likely to get revisited. So if you understand poor low can be repaired in a single day, or it can even take months to repair, right? But the chance of repairing those zones are high, right? So there is again, and we have two poor lows on the downside. Let me go back down further. So again, we are having a prominent POC on 3rd of March. 3rd of March, we are having a prominent POC, followed by the gap low. So there was an 80-point gap here. It's an 80-point gap. Let me compress this. So we have an 80-point gap here at 7,301, and the gap top comes around 7241, right? So one can expect all those levels to be get repaired in this March series. The problem is we don't know when, but eventually it happens. Eventually it may happen, followed by a range bound auction, followed by a sudden downside movement, followed by an quicker reversal. Right, that's what the open interest is so far intimating us. Anyway, the open interest sentiment is an highly dynamic one. It changes every day, and it changes every hour, right? And if I go further, so this is the short covering rally, which I was speaking. The FIs have done a massive short covering rally post budget, right? So we have a lot of anomalies as well. Anomalies represents the weaker structure here. So again, there are possibilities that these zones also are there is high probability that this zone will also get tested, because we have 1, 2, 3, 4, almost 5 anomalies here, right? So there are possibilities that a couple of anomalies, a couple of anomalies might get revisited here when the market is trying to do some sudden downside auction when no one is expecting in this market. So these are the levels. We have 1, 2, 3, 4, 5, 6 levels so far. 6 major key reference levels. Then let me check where the SGX Nifty is trying to open. I think we'll be opening negative around 20-30 points here. Okay, so almost we are going to open 20 points down, right? So we will be opening around somewhere in this range. So we'll be opening this range. We will be more likely to open around 7436 zone, right? And again, maybe the initial reaction will be to try both. We'll try to test both the edges. We'll be trying to test 7460 as well as 7415, right? So if the market is doing, say, most of the time it is trying to try to auction on the downside. In the later stage, we'll try to test 7460, or if the market is trying to auction on the upper side, if market say like it's keep on going up after the open, and finally there is high probability that we'll try to test the lower zone at the later session, right? So the thing is, we may try to fade both the edges, 7414 and 7460 for the today's auction, right? So again, and this again shows and some sort of range bound sort of auction. That's what is coming to my mind. So my high priority will be to test the patience of the short sellers. I mean, short retail traders who are in short. test the patience, and then leave it to their expectation. Let the market fall later at the later stage. At this point of time, try to do some sort of sideways option. This is what is coming to my mind so far. And on the upper side, let me check. Upper side, we have one more reference level here. We have a reference level at, yeah, we have one more interesting reference level. So this is where the selling came in last February 8th. There was an selling came at this zone exactly at 7447 zone. So far I haven't tested yet, right? So this is a zone, interesting zone, because it's again a mechanical sort of selling. So we've seen some sort of mechanical selling. So I marked this tail zone, the tail on February 8 as a mechanical reference zone, because we have previous day also we have a similar selling came exactly at that price, right? So it is again an interesting reference point to me. So if you understand those mechanical reference zone are more likely to get revisited, right? Again, the challenge is when, right? So we use sentimental analysis to understand when which side to trade and when to trade which side, right? So for, let me go to the sentimental analysis as well. Let me check if the sentimental tool is on analytics. Okay, here is the sentimental analysis tool. So this is a sentimental analysis tool for Nifty. This, of course, all the Tradezilla participants will be given access to this tool, right? So here, if you understand, so far the sentiment is positive. So we use Zurich RSX to measure the sentiment, right? So far the UL sentiment is holding on to positive, and there is nothing happening apart from bullishness here. And let me also open Bank Nifty sentiment. So Bank Nifty sentiment says, let me go to the daily futures, right? So from the daily futures, again, it is still maintaining the bullishness. Of course, it is reaching the overbought level, but still it can maintain as long as it wants, right? So there is no sign of bearishness coming from the picture here, and there is no emotions also there in the market. So one thing is, it will try to, again, the same thing, same concept is coming to mind. There's a sort of range bound action followed by an downside, followed by again an pullback. Right? This is what this will definitely frustrate the retail shorts. Okay, so the daily sentiment is up, and at this point of time, I just want to tell you the weekly sentiment also turned positive, right? So the Nifty weekly sentiment is positive, daily is maintaining positive so far, and we are expecting a sideways sort of action. Let me go through the Bank Nifty chart as well. So Bank Nifty charts, I haven't marked any references, right? So let me try to go and mark the reference. So let me split the profile and try to understand what's there with the charts, right? So again, we have an interesting stuff here. The same sort of situation here in Bank Nifty as well. We are having a matching high at C and D period. Right. So again, this is a weaker high, more likely to be get revisited, right? And we are also having an poor low. We are having a poor low at 15049 period. So again, trading. So we have to accept that the trading is going to be a lot tougher. It is not going to be on one side movement in the market, which we've seen some last 3, 4, 5 days. The market tries to change its course very often, right? Like a river. So again, so what happened? The Bank Nifty tried to clear all those anomalies which created on the 4th of March. and right now what it is trying to do is it has an poor low and a weaker high. So we may try to fade the edges again. We may try to fade the edges like as we seen in Nifty, right? So this is one high probable action, and again we are having an weaker low. Let me change this color to crimson. Crimson. Okay. Copy this. Control C, and then okay, again a weaker low at 14957. So, and we have an again this is what on 2nd of March is again a short covering rally. So we have a minus development zone here. So minus development zone here. So minus development represents the lack of vertical activity. So this zone has a high probability of getting repaired. And whenever the price is going to travel in this zone on the downside, the price movement will be very fierce and faster. So again, the base of the minus development zone is a little interesting to us. Okay, let me try to, and also we have another downside gap over here. Gap zone at 14478. Right, so we have one more minus development zone coming in. So a lot of reference level for Bank Nifty at least. So Bank Nifty to me looking like not a bullish picture here so far because we are having an the reference levels are coming to the deep, almost 1,000 points of downside here. So one possibility of playing this zone is, I mean, we try to take an put and then try to hold it for some time. Like one thing is market may try to do some downside action and then a sudden pullback and then followed by a reversal, or it may try to do an upper action and then again try to confuse the bears, test the patience of the bears, and then do the downside action. There are two possibilities are there which is coming to my mind, right? So I would like to see the market doing an again and one more upside followed by an confuse the bears, let them test their patience followed by a downside reaction. This is what I prefer if I'm if I want to play in this market, right? So again, if you notice the value area in Bank Nifty for the last 4 days are continuously doing an overlapping value area, and prior to that we can see a clear the value area started shifting higher. So 1, 2, 3 followed by an complete the value area getting overlapping. So the only overlapping says only one thing: the trend is getting tired and weak, right? So one more say let's say and one more an upside followed by an price rejection in 1 or 2 days, and then the market will try to test all those downside reference levels, right? So this is what is coming to a picture, but the consolidation is clearly visible in Bank Nifty point of view, right? So I guess if you have any questions, I can take the questions right now. If you have any questions, you can ask questions. There's a question panel on your right hand side. Otherwise, I mean, we are coming to the end of this session, right? So this is the final part 4 of complementary session, right? So if you want to further continue with the mentorship program, so we are conducting an mentorship program from 2nd April to 30th April almost. We'll be mostly focusing on AMI broker, AFL programming, market profile. On the weekends, we'll be having mostly webinars, and on the weekends, it will be filled up with, weekends will be filled up with webinars. Of course, it will be recorded and 6 months of access will be provided. Even if you are missing any of the webinars, you can every time you can go through the recorded session and you can revise it again and again and again. Also on the weekdays, we'll be having a daily market commentary session on all the market days, and all the market days we'll be having a trading room setup where we will discuss the profile patterns in real time, and we'll try to identify the opportunities during the market hours, and we'll try to listen what the market is trying to say and how to play in this complex environment, right? So thank you everyone. Thanks for your time and being here listening to me patiently. Thank you again.